Uncensored, the truth about money.
Hello, greetings everybody. How y'all doing? Welcome to episode 2. Episode number 2 of Uncensored, the truth about money. So last week we spoke about how to deal with debt, and there's quite a lot, different people, like we all have debt one way or another. So today we decided to dive in a little bit deeper and just fix our attention on car financing. It's quite common now. Everyone wants to own a car. Everybody wants to own a vehicle, and it's not everybody that buys the car cash, And so there are quite a lot of things and a lot of dynamics to it. And unfortunately, I don't know if it's just me or like we do not do our research. I don't know what happens. Like we do not. And as Tommy said last week, is that these things are available on the net everywhere. And that's where these institutions get us the most, Goma terms and conditions, because we don't read, like we get too excited, So today we want to dive into that and sort of explore that topic. So today's topic is obviously the truth about vehicle financing. And as per usual, I'm not alone. I'm with Pratamza, our financial expert. Pratamza, Fire? Grand, wena?
No, all good, man. All good. Can't complain, my brother. Good to be here.
Sure. So we literally have 10 minutes to deal with this elephant in the room. 10 minutes. Not enough time, right?
Yeah, we'll try. We'll try cover what we can, and in the time that we have. But as we had made mention last week as well, that people still need to do their own research, get clued up, and get wiser in terms of financing.
Sure, definitely. So let's get right into it, right? First things first, my question is, which is the best, buying a car through a private seller or a dealership?
Right, so that's a good question. So I think with this question, right, the first thing that we need to consider is your budget. Private dealerships or private sellers, they tend to be more cheaper than your dealerships, right? As well as, like, if I'm buying something privately, I'm able to negotiate the price. So, for example, there's a Golf 5 GTI, selling for 100,000 Rand by a private seller and 100,000 Rand by a dealership. So with a private seller, I'm able to basically, negotiate to a lower amount, depending on my negotiation skills, obviously looking at the condition of the car and so forth, right? And it's much more easier to buy a car that way because it's more on a trust basis. Whereas with a dealership, so dealerships obviously tend to be higher because you can imagine they're paying for the water lights, they're paying for the salesman's commission, they're paying for the rent and so forth. So all those costs, they are inclusive in that VW GTI that you're going to be buying at that present moment. It's much safer though. With that said, it's much safer to buy a car through a dealership because of security purposes. So if a car gives you an issue, you know where to run to. And, even the Consumer Protection Act has also made it a bit easier as well to put more rights and value into the owner's hands if there's any defaults with the car whatsoever. Whereas with a private seller, we can meet at, let's say, at a shopping center, and we finalize our deal then, but I'd be gone by then, and you get to find that the car probably was in a accident, and I didn't declare that to you. Probably was a rebuild, or worst case scenario, it's stolen. So my thing is obviously look at your budgets. If you can afford to go to a dealership, it's better to do so, because even the cars that they buy at dealerships, that they sell at dealerships, they go through a like a quality inspection. So they get they AA accredited, and you get like a 10-point safety measure on that.
Yeah. So okay, so now let's look at, so we're taking the route rather of buying a car through a dealership, right? Please explain to me, what is a repo rate? I hope I said it right.
Yeah.
Repo rate, right?
Yeah, it's a repo rate. It's a repo rate, my brother. Yeah. So essentially what a repo rate is, it's set by the Reserve Bank. So the Reserve Bank let's put it this way, they like the central bank that lends money to your FNB, Standard Bank, Absa's, Nedbanks, and so forth, right? So they've got their own rate at which they are borrowing money to all these commercial banks. So currently at the moment, it's sitting at 3.5%. So the repo rate, basically, it's just to regulate the inflation of the country. So if the repo rate is higher, so let's say now it's sitting at 5%, ultimately your banks, if you've got a loan or financing through Standard Bank, the interest rate will obviously be much higher. And with that being higher, people tend to pay more for that. And people tend not to borrow when the interest rates are higher. So that means that, prices of certain goods will not increase. That whole scenario of supply and demand. Mm-hmm. So when the repo rate is higher, there's less borrowing. When the repo rate is lower, like how it is now, it encourages people to spend. It encourages people to borrow. So there's more activity going on, and even prices of certain items tend to increase because of the demand. So essentially, a repo rate is what the Reserve Bank or the central bank gives an interest rate onto commercial banks.
Yeah. So there are two types of interest rates, right? There's the fixed and the variable. Would you mind just explaining this a little bit? And if given the choice, let's say you apply for a vehicle for finance, if given the choice, which one do you think is best to take, fixed or variable? And what are the cons and what are the pros and cons with that?
All right. So the difference between the two. So with the fixed, it's not like it's broken. A fixed basically just means that it does not fluctuate. Sure. So it doesn't go up and down. It stays at that fixed amount at which you had agreed upon with your borrower. So if we had, let's say, bought that GTI and we had said that, all right, we're going to pay 2,000 Rand at, let's say, 7%. It's going to be fixed at that 7% until the payment term has lapsed. So I'm going to keep on paying that same amount until basically, I finish paying off the car.
Sure.
Whereas with the variable, now that is dependent on the repo rate. So with the variable, if the repo rate goes up, the variable also goes up as well. So if we at that initial stage were paying, let's say 7% for the GTI, 2,000 Rand every single month, and the repo rate now increased. So we'll be now paying, let's say 3,000 Rand or 3.5 thousand, for that amount. Now the pros of a fixed rate is that obviously it doesn't change depending on what happens in the market. Although they are a bit higher than your variables, it does not impact the you as a client or as the customer. It'll stay like that whether Corona hits or Corona does not hit. It'll keep at that fixed rate. So the cons about that is that, so if you are now, let's say we're paying at 15% with your car payment, and coronavirus hits and the Reserve Bank, they decide to lower the interest rate. So it's been at its lowest since 1973. Now the prime rate is at 7.25%. So now you won't be saving any money because you are fixed at that 15%. So because now that the interest rates are lower, you'll still be paying that 15%. Whereas with the variable one, so if let's say after the Corona everything is fine and now the interest rates or the repo rate decides to increase, so that you'll now be paying more, for that car. So it depends on situations. If you know that things are going to be much better in terms of the interest rate will decrease. It's better going with the variable interest. But if you know that, situations are, or the market is probably going to, do an upturn and things are going to go quite bad, rather go for a fix, and you know that you are basically putting the risk with the insurer or with the finance company.
Yeah. Do they give you a choice between these, or some dealerships or banks rather? It's pretty much chosen for you.
Most of the time it's based on your credit score, right? So if you've got a good credit score, you are able to basically, ask for a certain interest rate in terms of a fixed or variable. But most of the time, I can say 80 to 90% of the time, most, finance companies or finance providers, they actually, go the variable interest rate out, because by them doing so, they're putting the risk on you as the customer and not on them. So they know that they'll still make their money irrespective of whether the Reserve Bank increases their rates or decreases their rates.
Yeah. But Samza, we are unfortunately out of time, but just quickly, what is a balloon payment?
So a balloon payment, so that's an interesting one. So you see people driving very flashy cars, right?
Yeah,
and they are earning
course.
not that much.
Of course.
So the trick is the secret, or how can I put it? Yeah, the secret is the balloon payment. So what people tend to do is that they'll, let's say, opt for the GTI. The GTI costs 200,000, right? So without the balloon payment, the repayment rate or the installment is, let's say, 9,000 Rand on that GTI. And now what finance companies have done is that, all right, so they say, Junior, it's fine, you can still drive this GTI. What we'll do is that we'll put a 30% balloon payment on this GTI. So the 30%, what they do is they subtract that 30% from the purchase price of that car, right?
Yes.
And they take that 30%, which you'll pay at the end of the term as a lump sum. So, which means is that Junior is able to afford that GTI at the present time, where, let's say, you probably now will be paying, as opposed to 9,000, you are paying probably 6,000 Rand, which is, quite maybe affordable for you. But now the trick is, to actually compensate for that balloon payment in, at the end of the term, because when you finish, then that 30% is still needs to be paid. So what then companies do is that you find someone, let's say, driving or financing a car for like 7 years, as opposed to 5 years. So at the 5-year end period, the bank will say, right, Junior, here's the 30% that you still need to pay, probably 60,000 Rand or 70,000 Rand that you need to pay upfront. And Junior has not made provisions for that 70,000 Rand. So what they'll do is that they'll refinance that 70,000 Rand, where you'll pay that 70,000 Rand over a period of 2-3 years then.
All right. Unfortunately, we are out of time. We definitely have to have a part 2, because you've literally just opened a can of worms and I've like a lot of questions, Anything from your side, Pratamza, before we leave?
So as we say all the time, do your research, do your homework. Don't just, see those flashy wheels and, go to the dealership, because chances are that salesman will make you, qualify for that car with a balloon payment of 30 or 40%. But, just look at your affordability. If you can afford the car, go for it. If you can't, lay low and your time will come.
Cool. Thank you so much. And one more thing, guys, please check us out on Instagram. We are on Instagram, uncensored_ the truth about money. Feel free to drop a comment. Feel free to suggest topics or whatever questions that you have. Pratamza will definitely be more than happy to help you out. Pratamza, thank you so much. Until we meet again.